Your house is worth whatever it's worth, right? Whoever sells it. Wrong. I'm Charlie. Welcome to Moving Home with Charlie, and thank you for coming.
Charlie Landing grew up in Sussex, is the founder of Best Agent and presenter of Moving Home with Charlie.
If you want to find one of these guys, look out for those compassionate professionals. All estate agents are not the same.
So Charlie, what would be your advice for people interested in buying new builds right now?
Don't overpay. Do buy, but don't overpay. That's why I say disregard the guff. Read into the numbers and look, and it's buried. The bad news is buried in the small print, okay?
Good evening, everyone. Welcome to the Property Press Awards.
They may or may not be telling the truth, but you should form your own view. Get out and view, get out and view, get out and view. You cannot be in a position to make offers and have the offers accepted if you're not viewing. Just be out there viewing. Pay attention to the back of the class if you've not been watching my videos. I did one just a couple of days ago. Disregard the guff, guys. Good evening, everybody. Happy Sunday. It's 9 o'clock on Sunday, the 12th of March. And I'm going to be extremely careful with what I say in this evening's live stream, because the purpose of this evening's live stream is to reduce uncertainty, reduce anxiety, and to try to shed as much light as I can in a completely unqualified way, just for what I do know about these things, with you, so that you can maybe understand a little bit about what's going on and what I think might happen. I want to make one thing crystal clear right from the start. Do I think UK banks are at risk of collapse? No, not at all. Not at all. Certainly not the big ones, and certainly not anytime very soon. If you were to ask me today, do I think there's a possibility of a UK bank collapsing? I would say if it did happen, it would be a small one, and it's not going to be imminent. All right, if it did happen at all. Now, the purpose of this live stream is to talk about Silicon Valley Bank's collapse. In a nutshell, it's a 40-year-old bank in California, which was shut down by the federal government on Friday last week, making it the second largest bank failure in US history and the biggest bank failure since the 2008 financial crisis. So the big question that everyone's asking is this just an isolated incident, or is this the beginning of another much bigger crisis? And that's the question I've been keeping in mind as I've watched very closely what's been happening over the weekend. And I've been listening to some fascinating conversations on Twitter Spaces between US journalists and investors and bankers and people who know about these things. And let me tell you what I do think has happened. Let me just run through a few quick screen shares with you, okay? Just so you can see where we are. So this is on a website called politico.eu. Silicon Valley Bank collapse sets off scramble in London to shield UK tech sector. So there are a large number, there are hundreds of UK tech companies affected because Silicon Valley Bank had a branch in London and it's been taken over by the Bank of England, right? It has been effectively shut down. And so Jeremy Hunt and Rishi Sunak and the governor of the Bank of England have been talking over the weekend, trying to work out some sort of rescue package. Otherwise, hundreds of businesses will be immediately insolvent, and nobody wants that. Share with you this. I found this particular post very, very helpful. This is not someone I know, but someone on LinkedIn. And it puts into context the scale of this collapse with other collapses. So Silicon Valley's bank's customers withdrew 42 billion from their accounts in one day. 4.2 billion an hour, or more than $1 million per second for 10 hours straight. To put that in context, the previous largest bank run in modern US history took in 2008 and totaled 16 billion, so a third, over 10 days. So this is a 30 times bigger, roughly, bank run than the previous largest bank run. And this image here is all the American bank failures. And Silicon Valley is 209 billion, that bank. Okay, so just to put it in context, this is not, I know very few people have heard of this bank, but in the context of its size, it's a big deal. All right. Now, Bloomberg, markets at risk of more upheaval as banking uncertainty persists. Okay, so that's talking about the market. Traders are steeling themselves for the risk of more turbulence after the biggest US bank collapse since 2008 financial crisis sent shockwaves through the market, which it has. Now, there are now people circling to buy the London version of the bank. But there's a story on the BBC here about UK scrambles to help tech firms after Silicon Valley Bank collapse. And I think I've linked to most of these stories below in the description below. It's worth reading these stories. I'm not going to go through them now. Most recent story this evening was actually on the Telegraph, and it's Sunak plays down financial crisis risk as lender makes offer for Silicon Valley Bank. It is worth remembering that the Bank of England and the Prime Minister wouldn't make statements about fears of a new financial crisis or about systemic stability unless relevant people were worried about it. And the relevant people are worried about it. And of course, the only statement a bank or a government can ever issue is everything's fine. They can't ever issue a statement saying everything's not fine. They've never done that in history. They're never going to do it. So the fact they make the statement at all is concerning. So they're talking about potential of mass company collapses without adequate intervention. And these are expected to hit jittery financial markets hard on Monday morning. And I'm just going to just share this one last story to put this in context so that people understand the scale of the potentially wider problem. So this is on CNN.com, and it's a story saying US banks are sitting on unrealized losses of $620 billion. And this refers to the fact that they're holding bonds that have gone down in value, but they haven't, because they haven't sold those bonds, they haven't crystallized those losses, but that still creates a problem for some banks. So what actually caused Silicon Valley Bank, as I understand it, was the fact that unusually compared to all the other banks, it didn't hedge itself properly against interest rate rises, which is what all responsible banks will do. I mean, there's all kinds of shocking stuff that's happened there, but those are on there's outrageous conduct by certain people and everything else. But that's by the by. That's just gossip. And all of the other banks that I saw in a graph, they do have themselves hedged against interest rates properly, but that doesn't stop them against the problem of bonds being devalued. And being capitalized is one thing, and our banks are definitely better capitalized than they were in 2008. But that being well capitalized doesn't mean that they have got good enough liquidity. They do have better liquidity now than then as well. I know that, but liquidity is the problem that causes this crunch, because that's a $200 billion bank that's gone bust because of a $1.2 or $1.8 billion loss. Well, why would a bank that makes a $1.8 billion loss go bust if it's worth $200 billion? The answer is because there was a run on that bank. And the run was started. They knew this problem was coming, and Goldman Sachs was advising them. And Goldman Sachs advised them to sell some of their bonds at a loss in order to cover the liquidity problem. But by crystallizing that loss, it made it public. And the chief executive of the bank went to shareholders and said, "Don't worry, everything's fine." And then it's like a stampede. When no one's running, no one runs. When one person runs for the exit, that's it. Everyone does. Whoosh. And this is what makes it very difficult to predict what's going to happen next. And I'm not going to try to predict what's going to happen next. I'm just going to talk about the possibilities of what happens next. I have already had today a private message from someone going, "Charlie, I've got my money saved up, six-figure sum saved up, and I'm really scared. What should I do?" And I said, "Don't be scared. Don't be scared." So the first thing is that if anybody panics, then everybody loses. And there's no need to panic now, because the UK government guarantees £85,000 of bank deposits. Now, if you've got more than £85,000 of bank deposit, it might make sense to then break it up if you've got more than that in one bank and put it into 2 or 3 different banks, so that we're not going to have a situation where all the banks go under. One of your 3 banks might go under, and if one of them does, the government's guaranteed your loan. But there's no rush to do that. That's the point. There's no rush to do that. What I do think is going to happen sooner is, I think that tomorrow morning, Monday, a lot of you will be watching this video on Monday and be interested to see what happens. I do think the stock markets are going to have probably their wildest day in a very long time on Monday, the 13th of March. I think it has the potential to be a really bad day at the office for the stock market. It's definitely going to be a busy day. It's definitely going to be a volatile day. There's going to be uncertainty. People are going to be selling stuff and moving stuff, and unfortunately, it may be too late. And because the markets close over the weekend, and it's funny, I heard someone say that whenever these things happen, they always make it happen on a Friday, because it gives the government and the authorities 48 hours over the weekend to try and get their plan together. I don't know what's going to happen in the US. But bank failures are a little bit like wildfires, in that you never know if or when one is going to happen, but you do know when the conditions for one make it higher risk. So, that you have wildfire, a high risk season, when there's been no rain for weeks or months and very hot sun and everything's tinder dry. The chances of a wildfire happening are very high, but you still don't know where it's going to start, and you don't know when it's going to start. And that's a little bit what happens with bank runs. People are very jittery. I'm talking about US now, not the UK. I don't think anyone's jittery about UK banks. I don't think anyone needs to be jittery about UK banks in terms of the mainstream banks. A wildfire, you can have a wildfire season when actually you're expecting everything to go up any second now, and it just doesn't, because no one puts their cigarette butt out and there aren't enough sparks, or whatever it might be. But it can be that butterfly effect of one person calling up another person and saying, I think I'm going to go and get my deposits out of that small bank. And they go, you okay, I will too. And then a few of them go, and that little snowball starts, and then that one small bank ends up being taken down. And of course, banks failing makes headlines. I think the unavoidable certainty, or the unavoidable conclusion of this, is that we are about to go into a period of market uncertainty and turmoil. I cannot see that not happening, which is just bad for everybody. It's just bad. Uncertainty is bad for businesses. It's bad for people moving house. It's bad for industries. It's just bad. And I can't see how this doesn't become a period of uncertainty and turmoil in the financial markets. And of course, that affects bank rates and swap rates in particular. And swap rates are the mortgage market rates. And so we might see mortgage rates suddenly go up. And that's going to be extremely unhelpful to any tentative signs of recovery that the property market was showing in terms of activity and deals being done. So I fear this is bad news for the moving industry in terms of uncertainty. I think that if anyone's in the middle of a transaction, you should be going through and completing it. If it's a home transaction, if it's investments, it's different things. I can't comment on it. But if you're about to buy a home or sell a home to move, you should continue, definitely. If the reason is for moving home, you should just continue and get your move done. I just want to be very cautious in not saying anything untoward. I'm trying to do the opposite of scaremongering or doom-mongering. I'm trying to actually pour oil on troubled waters. But at the same time, I also want to make sure people are aware of what I think is coming. Like I said, let me repeat it. I don't think any banks in the UK are collapsing anytime soon. I do think that what's happened in America is going to cause uncertainty in the stock markets globally. That's going to affect London. It's going to affect swap rates. It's going to mean that mortgage rates might become uncertain again. I think on the wider, so looking outside the mortgage market and looking at the investment community, the money markets as a whole, one of the things I've picked up from all the things I've been reading and observing over the weekend is that people don't think this is going to be the only one. There was a line actually, I can't remember where it is now. In one of the articles that I wanted to show you, it said about that this was the first one, that the Federal Reserve is scrambling to prepare for the next one, as though it's expecting it already. And if that happens, and if there are more, and you do see it 2 or 3 others, maybe smaller banks go in the US, it's just what happens is, I mean, individual investors around the world start making decisions. What do I think? Am I going to leave all my investments where they are, or am I going to move them all? And just people deciding to move their investments. For example, let's say they want to take it out of the stock market and put it into gold, or out of property and put it into cash, or out of cash, but just a sudden increase in transaction numbers and value in the investment markets is seen as turmoil and uncertainty. And that in itself can trigger wider anxiety, unrest, uncertainty, and worry. I think this situation may end up being contained. We might hear on Monday morning that Americans have found a buyer for the bank and they're going to take it over, and stability will be restored quite quickly. They might find the same for the London bank as well, where there are already people apparently offering to buy it. The problem is that people are offering to buy it at sort of 60 cents on the dollar, or a lot less than it's worth. So it does mean the depositors, there will be losses. But if this is contained, and if nobody panics, and if calm is restored, this just might be a wrinkle and a bump in the road, and we might be back within a few, weeks to where we were last week before this happened, which is where we were last. There was relative calm and relative stability, wasn't there? So that's kind of the best case scenario that I think we can hope for, is that this situation gets contained and calm is restored. And on Friday, when I heard this has happened, that was actually my expectation. Okay, whoops, pop, there goes a bank. That's going to cause some headlines, but generally speaking, banks are well capitalized, so there shouldn't be much fallout and contagion and spread of this. But as the weekend's gone on, I've become less and less confident that that's the case, and I do fear that this is going to lead into a potentially a period of prolonged uncertainty and stability, and maybe worse. And if I was a gambling man, and if I was in a casino and someone said to me, right, you've got to put all your money on black or red, and you got to bet on one, are you betting that this is not the start of a new financial crisis, or are you betting that this is the start of the new financial crisis? If I had to pick one of those two, and I had to gamble everything I have on one of those two things, it would be the latter. It doesn't mean I'm confident or expecting that to happen, but if I was forced to gamble on one of those being that, which do I think is a more likely outcome? I fear it's the latter. It could play out over a long period of time, but what does that mean for people moving house? Move house. Moving house is moving house. It doesn't matter whatever's happening in the markets. If you can complete your transaction, complete your move on with your life, you should. But if it hits the mortgage markets in such a way that interest rates have to go up, or mortgage rates have to go up, even if the bank base rate doesn't go up, if mortgage rates go up because swap rates go up, because short-term money becomes more expensive, that's only going to increase downward pressure on prices and increase downward pressure on transactions and uncertainty and fall throughs, if that is what happens. So I genuinely don't wish for that. I genuinely wish for stability, and so whatever happens to prices, I don't really mind. But what I do wish for is some certainty and stability, so that people can carry on with business and life. That's what I think everybody needs. Do we have any questions? There's an awful lot of you on here. Yeah, I think stress testing banks is a bit like stress testing mortgages. The imaginary scenario that they test them for this stress probably wasn't the scenario that the world is in now. A bit like mortgage stress tests. When they devised them, they didn't factor in inflation, war, cost of living crisis, etc. Anyway, guys, does anyone have any questions that I can actually answer? Yeah, that's fair. Danny Magic, YouTuber Joe Blogs, good on that situation. Yeah, fair enough. I had 3 years in the city, and I was qualified as a trader for a while, and I did used to trade in the money markets. Other than that, I'm just a bloke down the pub. So, Hanrako, will this finally make sellers lower their prices significantly? If it turns into a full-blown financial crisis, which hits mortgages, yes, it will bring prices down, I believe. The US and UK, they're just, all of the banks and institutions they're just spread out and interlinked, and it's backwards and forwards, and you don't get one without the other one. Look at what's happened, right? A Silicon Valley bank has gone bust, and the UK government has had to step into action to intervene to protect UK companies. That's how closely related the whole thing is. I'm just looking for any other questions. Live stream every night next week then. I don't know. I mean, only if I think I can actually add something. The purpose of this is just to answer the questions I know that everyone's had. I've been seeing lots of questions, and I wanted to talk about. I don't know how Bitcoin's going to do. I genuinely, guys, I just don't know whether this actually. I mean, what people don't know is that just before Silicon Valley Bank went bust last week, a bank called Silvergate that went bust, a smaller one. No one really noticed it, but it went bust because of crypto problems. So I think that there are unresolved problems with crypto as a whole that have yet to play out, that are going to play out in this system. I think volatility in crypto is still very high. Tractor Shed asks, what would I do if inflation took off? Own a home or own cash? I don't own a home. You can't live in cash. I would definitely own a home. How badly do I think swap rates will increase if it goes to worst case scenario? I don't know, Gary. I couldn't put a number on that. That's great. Philip Hudgens, I have lots of crypto. It desensitizes you somewhat to losing huge amounts. What a wonderful. No, sorry, I know Silvergate wasn't a bank, but Silvergate was a non-official bank, or whatever they call it, wasn't it? It was still quite a big failure as a result of. Yeah, but Tractor Shed, buy a house doesn't mean no crash, because you're forgetting the point. This is the one point that downturn deniers don't seem to understand, is that availability and cost of finance is what determines house prices, whether you like it or not. It is maths. If interest rates increase, the amount people can borrow reduces. that brings house prices down. It's gravity. You can't do anything about it. It takes time. It takes a sweet time. But as the rising interest rates, as people come to the end of their fixed rates, and it's going to pull house prices down. Okay, I'm only going to answer this question because it has a funny answer. Charlie, personal question. Do you own or have any cryptos? I never answer personal questions, but this one I'm going to answer because in 2017, I bought 200 quid's worth of Bitcoin and I can't find it. And it's worth about 50 grand now. I've lost it. So yeah, yes, but no is the answer to that, Andrew. I did write the codes down somewhere and I cannot find where I wrote them. Heather Kim, is it still safe to deposit 85k into different banks? As far as I'm aware, yes. As far as I'm aware, yes. Anyone else got some questions that I can actually answer? Popolop asks, do I think they will have to print more money? I don't know. I don't think so. I mean, if they do, it's because it's got worse than 2008, right? If they end up having to put printing presses back on, I don't have an opinion on. I just can't see it doing. I don't know. It could maybe, but it's only because things have got so bad that they have to do that. I mean, they did that last time to help banks restore balance sheets. And that isn't the problem this time. So I don't see them having to do it this time. I don't think they're going to turn QE back on. They're still pursuing a policy of quantitative tightening or quantitative destruction, as someone else said. Monkey Tennis asks, do I think Fed and Bank of England will now pivot at the next meeting at the end of this month and keep rates the same? No, I don't think that. I don't think this is going to affect. I mean, I could be wrong. I'm an utterly unqualified person to make an observation on that. But at the moment, I think they're still more worried about inflation than they are about anything else. I think that they always knew that rising interest rates was eventually going to make a few things break here and there. And I don't think they're surprised by this. Guys, I don't do investment questions. It's just about homes, really. No, I haven't seen the bail-in policy. I've heard of it, but I haven't seen it. Do I think this is a pretext for CBDC? It's certainly a cogent theory. Force a few banks to collapse to make people think that banks aren't safe with real money, and therefore CBDC looks safer. That's one theory that I have heard. Oh, Emma, spot on. It's sentiment. You're quite right. And it is sentiment more than anything else that's going to determine what happens in the next week or so. It is, it is sentiment. This is what a lot of, economists and predictions and spreadsheets and forecasts just go out the window when sentiment comes into it. And sentiment, I mean, panic is a sentiment, and there are people panicking, people worrying. Absolutely. I was expecting the interest rate to go up either 1/4 or 0.5% at the next meeting. I don't know if this is going to change it. You're not a fearmonger at all. Bring back the old Charlie. Mad Mountain Man, do I think this latest news and uncertainty will speed up house price falls? If it doesn't get contained, the answer is yes, I do think it will speed up house price falls. If it gets contained, they'll continue on the trajectory that they were. My Peterson stole, Vince. You know what I mean by that. Just trying to see if there are any more questions I can answer. Oh, so Shahan Choudhury asks, he asked an earlier question about, is it better to buy a home and live in it or keep the money in the bank? I would feel happier in a physical house I was living in than having that money in the bank. If it was a choice between home or bank and renting, I wouldn't worry about. Having a home. You need somewhere to sleep at night. You need somewhere to feed your children. You need somewhere to spend the days. Somewhere to go home. You need somewhere to spend the weekends. You need somewhere for family to come visit you. You don't. If you've got money that you can just sit in a bank, that's almost surplus to your needs. Do you see what I mean? It's like it's a nice to have. Yeah, money that you don't actually need to exist is just a nice to have, and of course, no one wants to lose it. But I can't give you an opinion about where is a safer place to keep it. I just can't give you an opinion on that. Okay, this is the most common question I get asked. Should I wait to buy a house? If you can wait, if it's comfortable waiting, if you're not under pressure to move at the moment, I would be being very patient. Yeah. But if you don't, if you are in a stress position or need to move, or just want to get into a house that you own and don't want to be renting anymore, then you should still buy now. You should still buy now. Just don't overpay, as long as you're planning to stay for the long term. James, just remember, James Deacon saying prices haven't dropped in Devon, Torbay at all. Just remember about the time lag. I mean, I know that Torbay. I've heard other people saying that the prices are holding on high there. But just remember that there is a real time delay in what's actually happening at the coalface. That's a great question, Jacek D. How do you expect sellers to react to SVB failure? Okay, well, I put sellers into 3 categories. The silly sellers who just put a price that they think the house is worth and they're going to wait until someone pays them for it, who will just do nothing, and they'll continue on and go, well, my house is worth what I think it's worth, and therefore someone will wait and they'll do nothing. There'll be people who will be unsettled, sellers who will be unsettled by this news, but not be sure about whether or not it's going to affect and how fast it's going to affect them, and they're going to hesitate. Again, I'm assuming that this doesn't get contained and this problem does actually play out into prolonged uncertainty, and they're going to wish they'd moved sooner. And then there'll be the ones who've been already thinking about dropping price for a while, and they've been on the edge of making a decision. They're going to do it now. They're going to do it now. I mean, I know that there's been a very large number of price drops around the country. The number of properties having their prices dropped is going up already. I do have updated data for Wales. Craig. Oh, sorry, thank you. That's a good point. Chris says, don't forget to tell Heather you can have £85,000 in 2 different banks as long as they're not part of the same group. As long as they're not part of the same group. That is a very good point. Well, guys, I'm going to call it. I wasn't planning on doing live stream tonight, but I thought I needed to. I am going to, one more thing here. Adrian Griffiths. Estate agents will be pricing according now and convincing sellers to do the same. This will speed up market correction. Yeah. I think that might probably be what happens. Thanks for watching, guys. Have a lovely evening. Sleep well. And strap in for a bumpy week in the markets. All the best. Have a good night. Bye-bye.